Well, let's go over crude oil right now. So if we're in a downtrend, the magenta you log in, the first chart you look at is this 5-minute chart. If the magenta is in a downtrend, you want to do one thing. You want to sell the first test of HVA. And that's these red dots down here. Red dot on the bottom left chart is the volume area, and then the middle chart is the trend chart. So either we're selling 94.25 or we're selling 93.79. Well, I said when I first logged in at 8:15 this morning that I like to sell the first test of HVA or the hedge fund up here. So as we move up, let me move the opening range off, and we'll go over that in a second also. As we move up, here we go. As we move up, we look for the 89 tick to get us in these in the trade. So what we're going to do is we already know we want to sell the first test of HVA. It was 1 for 1 yesterday, and now it's 1 for 1 today. So I know if I'm in a downtrend, I know one simple setup. You know, we just had 2 members in the room said they're batting over 90% on the trades, on just number 1 trades, and then they add the J extension, the Fibonacci confluence, and Josh even has been 100% on his trade. So that's phenomenal. If you can just bat over 70% on a trading program, you're doing great. So guys, both of you, good job. But the bottom line is that if you're in a downtrend like this, you want to sell the first test of HVA. Okay, so what we do is, since we know that's the area, and that's the area that I projected as my sell area at 8:15 this morning, I was 30 ticks away from it. As we move up, we look at the 89 tick. When the 89 tick, we look for big giant bars. We want to know where the buyers are going to get trapped. Right there's your big bars. There's your big bars. Now we're into HVA down here. HVA. Now we're into the hedge fund. Now I want to look for what? I want to look for my small candle to pop up. I want to go from large candles where I know the buyers are possibly getting trapped. I want to look for a small candle, which is typically my spinning top or my doji. All of our trades this morning have been spinning tops. That looks like a little box in the middle with equal wicks on both sides to be easy for you to understand. And there's your red reversal bar. And look at that, just nailed the market this morning. Look at that number 1 trade. It's 1 for 1 this morning. Caught the high. So my methodology caught the high on the retracement, and we knew to do that 30 ticks away. We knew down here when I first logged in that that's our sell point. Okay? And that's what you do. You're good to go. Now the opening range trade also, what we do for members, we like to see a lot of energy off the market at 9 a.m. when the pit opens up. We have this indicator we set you up with. And this indicator we show you how to put it on your own charts. If the 5 minutes in a downtrend at 9 a.m. when the pit opens up, I'm looking to short below 53. You can do a stop limit or a stop market. I mean a stop, which is at the market, or a stop limit, which is at a specified price. Typically traders go between 3 to 4 ticks below this number. So my fill this morning was 48 short on the auto trade. I was 48 short. And manually trading, a lot of you guys and gals got in 49, 48, 47 short. We go all the way down to 05. You only want to take this indicator. It pops up automatically on your own Ninja charts as members, right? It pops up right at 9. I show you exactly how to do it, but you want to only take it with 5-minute trend. Why this worked out so good this morning, we're below LVA already. Right here, we're below LVA already, and we had nothing but black space below us. So you see those setups in the room, you know that opening range has a high probability of going down. Okay? The bottom line is this, guys and gals, is that with the accuracy of some of these members that they keep teaching you that's been in the room for quite some time, is the accuracy off the number 1 trade is the top trade to take. If we look at this trade today, we were 1 for 1 yesterday. The market's in a downtrend. The HVA, the volume level, only hit it once. Look at that big trade. Today, look at the number 1 trade over here. It's 1 for 1 today off of the number 1. So the number 1 trades, I cannot stress this enough. If you are new to trading a crude oil or gold or what have you, or if you have experience in the markets, you know, it doesn't matter. I don't care if you've been trading 30, 40 years or first 3 months of trading. It doesn't matter. You need to stick with the number 1 as your core trading method in this trading room, because that's where the order flow is. We're looking for the markets in a downtrend. I want to snap back up into the high value area. I want to short the first test. Markets in a downtrend yesterday. We had to wait yesterday all the way to 10:30, right? And then we got that first retest, good to go. And the other trades were chopped yesterday. We had a number 2 that was chopped and number 3 this morning that was chopped. So your number 1 is your most accurate trade in the room. I want to express that to everybody. I want to make sure you understand that. That way, if you're looking for consistency in the room, that's your core main setup. A lot of traders in the room just trade 1 setup and that's it. And some of them typed them in that they just trade that one setup, and that's all. And that's all they do, right? So just make sure, we all want to be on the same page.